Hi there, my name is Jen and I'm a lending associate at Sonova Lactabani branch. I'm here today to talk about credit. Things like what is credit? What is good or bad credit? What affects credit? And how can I achieve or maintain good credit? Whether you're looking to buy a new car, go to university, or buy a house, chances are at some point you're going to have to apply to borrow money. One of the main tools used for your application will be your credit report. A credit report is your reputation as a borrower. It tells the lender different information about your borrowing history to help them decide how likely you are to repay your loan. Information like how much you've borrowed, how much you've repaid, and how often, if ever, you've been late or missed your payments. It also shows personal information such as name, employer, and address, public record and collection items, even things like unpaid utility bills and parking tickets. It also shows other places that have pulled your credit. Did you know that when you go car shopping and apply for financing at the dealership, that some dealerships will send out your application to numerous places? This might seem harmless enough, but too many credit pulls can hurt your credit score. A person who has many credit pulls in a short period of time might be seen as credit seeking, and that could be a warning sign for someone who is overextending themselves and may not be able to repay. Your credit score is made up of many different factors within the report. Factors that affect your credit score include how long you've had credit, how long each credit has been in your report, if you carry a balance on your credit cards, if you regularly miss payments, the amount of your outstanding debts, being close to, at, or above your credit limit, if your debts have been sent to a collection agency, or any record of insolvency or bankruptcy. A good credit score can save you thousands of dollars over the life of a loan. For example, you may get a better mortgage interest rate with a high credit score than you would with a lower score. On a 30-year mortgage for $200,000, the savings can be significant. If you can get a rate of 2.69% on a $200,000 mortgage, your total interest paid will be $91,088. But if you have a lower credit score and only qualify for a rate of 5.5%, you will instead pay $150,250 in interest over the life of the loan, or nearly $60,000 more. On top of that, you will also have a higher monthly payment. So aside from banks and credit unions, many other places may use your credit to assess you. This includes credit card companies, retailers, insurance companies, employers, car leasing companies, cell phone companies, governments, and even landlords. Now that we've discussed what a credit score is made up of and how it can impact you, really, what is a good score? Okay, so in Canada, credit scores range from 300 up to 900 points. The higher the number, the better the score. Different lending institutions have different standards, but generally a score above 650 is desirable, while a score under 650 may cause issues when applying for credit. I hope that my discussion here today has enlightened some of you as to how credit can affect all sorts of things in your everyday life. Ultimately, the best way to maintain a good credit score is to only apply for credit when you need to, always pay your bills on time, and try to avoid having balances near the maximum limit. Of course, if you're struggling with any of these things, please contact your local Sonova expert today, and we'd be happy to help. I hope everyone is safe, happy, and healthy. Thank you.